Like-kind exchanges are very popular in agriculture. Whether the transaction involves a trade of real estate or equipment, agriculture producers find tax-deferred exchanges to be a useful tax planning tool. Joining us now by phone to discuss checkoffs, the courts, and the free speech is Kansas Farm Bureau Professor of Agricultural Law and Taxation at Washburn University School of Law, Roger Mickowen. Roger, thank you for joining us once again.
Thank you, Janet. Good to be here.
So how is personal property determined to be like-kind?
Well, there's just a couple of tests, and it's a tougher test than it is for real estate. But basically, it's by reference to being within the same product class or the same nature and character. It doesn't have to necessarily be the same grade or quality. But for intangible assets, a lot of farmers will have machinery and equipment and other intangible assets. It's done on a item-by-item, asset-by-asset basis. So you can trade a bull for a bull, a combine for a combine, but you can't trade a combine, for example, for a sports car or a farm or ranch for publicly traded stock.
And how about real estate? How is it determined to be like-kind?
Well, there's a much broader definition that applies to real estate in determining what like-kind is. Virtually any real estate that's used for business or investment can be exchanged for any other real estate if the party that is receiving the property continues to use that replacement property for business or investment purposes. So it's how you use it. So you could trade bare farmland for farmland with improvements on it. You could trade farmland for investment condos in town. As long as you're using the replacement property in your business or for investment, you're good to go.
And what are the holding requirements on exchange properties?
Well, there's really no holding requirement other than what people probably are commonly familiar with, and that's a 2-year rule that applies when the trade is between related parties. What the IRS is concerned about is the use to which you put the replacement property, and obviously it's going to be easier for you to show that the IRS that you're using the replacement property for use in your trade or business or investment the longer you hold it. What they really frown on are quick turnarounds, the fix it and flip it type deals. Those have trouble qualifying for like-kind exchange treatment.
And what are the rules when it comes to handling debt in a like-kind exchange?
Oh, that's a good question. That's where it gets tough. Basically, you're going to have gain that's triggered if there's debt involved, and there's very technical rules that kick in when there is debt that's involved. But if you've got debt in a like-kind exchange, you really need to have professional counsel help you through it.
All right. Well, Roger, thank you very much for your insight once again, and thanks for joining us. Again, talking with Roger Mickowen, Kansas Farm Bureau Professor of Agricultural Law and Taxation at the Washburn University School of Law, joining us on the phone from Topeka, Kansas.